Hey everybody, what's going on? I want to get out a video today on a Sunday before market opens tomorrow. I see a really nice opportunity here with PYX, and I'm going to show you exactly why. Um, but anyways, I'm looking at this on a daily right now, and you can see this move that I'm really interested in right now is this last leg that we're looking at from here all the way up to there. And what interests me the most is when I draw what's called an impulse leg or an anchor leg, sometimes it's referred to as. I'm looking for the lowest low to the highest high in order to draw that leg, and then I'm looking at the retracement because that's just how markets move. Markets tend to do one of these, then they pull back, they make a new structure high, tend to pull back, and where do they pull back to? Typically right where that level of resistance was, which now becomes support, okay, right there, before they start continuing on higher. That's just a basic trend. You're making a higher low, and as well as a higher high and a higher high. That's kind of what we're looking at with this right here. And I'm looking at this first leg that moved up right here, and I'm going to measure it. In fact, I'm looking at a daily right now. I like using the daily just as an overall view, just to see what exactly the market is doing with this stock. But to get into trading mode and buying mode, I'm really looking at the 4 hour and 1 hour, sometimes the 15, but not all that too often. But I'm going to move it from the daily down to the 4 hour. Those two time frames actually look very, very similar. But what I'm looking at right here, I'm going to draw it in right here. I'm looking at a line of what used to be resistance right here. I'm going to go to the top of this candle because I have a candle here, I have a green candle here, a green candle here, green candle here. I'm looking at drawing a line at the top of that green candle right there to really get in or to actually show a level of resistance that has been broken. You can see this break above right here, and then there's a pullback right here before it starts continuing north. But if you notice right here, this one candle right here broke above and closed above, which is very important to close above, this level of what used to be resistance and is now turning into support. And that's where I'm going to draw my leg from. And the reason I'm drawing it from this lowest low right here, this low candle, up to the top right here. Again, I'm starting from that low right there because this candle closed above these. So that's technically what's considered a new structure low. So that's where I'm drawing that first move. Now what I'm looking at right here is a retracement or a pullback of that first move. And the way I'm going to measure that is go to my Fibonacci retracement tool and measure it from that lowest low candle to the top of that green candle, and you'll see that that retracement right there perfectly touches let's see if it goes to the penny. That low right there is at 55, and not exactly to the penny, but really darn close. 2362 is my 382 retracement before it turns around and continues north. Okay. Now, the significance about a 382 retracement is that 382 tends to indicate trend continuation. Now, I can also draw a line of resistance right here, and you can see right here that right after it turned around the 382, it broke above and closed above several times above that level, what used to be resistance right here, breaks through and is now support. You can see it pulled right into that line, acted as support for a little bit before it decided to retrace even more. Now, the significance about this is that it already broke above and closed above this last structure high right here. Okay, that is by definition a trend, making a higher low, a higher low. You're making a initial structure high right here, a new structure high right here, a new structure high right here, and a new structure high right here. Okay, or I should say just higher high as it continues on north. So we're in trend right here. Markets are in trend about 30% of the time. They're in consolidation or trading sideways about the other 70% of the time. So I'm looking at a trend continuation trade right here. Now what I'm looking to do is to get long on this pullback. What I was looking for is on this entire retracement right here, going all the way back. I'm looking at that retracement, and I'm looking for a higher high, higher close candle in order to get long. You can see right here, this is where we got it. In fact, this was a pretty nasty move. If you bought right around the 30.75 mark and you rode it all the way down, that's pretty brutal right there. But I never was interested in getting long because I never got a higher high, higher close candle until this one popped up on the 28th. And that's my lowest close candle. This candle right here closed higher than my lowest closed candle. Everybody see that? I'm gonna hone in on it right here so we can see that. Pretty simple to see on this one right here. That's pretty obvious. That tells me that the market is showing an intention of continuing that upward trend. And we know that that trend it has already signaled to go higher because it closed above that level of resistance right there. So what it did right here, it broke up and then it retraced, broke above, and then now it's retracing right here. Unfortunately, it's retracing all the way back to this level right here, which by definition is still an upward trend. And really important to understand this. And the reason why is because this low right here has not broken below this low. If we break below this low, and let's say that we start hitting these levels right here, maybe even close at that level, I don't want to be in that trade at all because that's no longer an upward trend. And the trend has been broken, and the statistics for it to continue are not going to be high at that point. So I went ahead and I got long about $1 higher than where we're at right now when it's all averaged in. I have about a I want to say it's about a $55,000 position at about 24.90. I think is about where I'm at, or somewhere around there. So I took a position right here. Now, where's my stop going to go? Well, just what I said right here, I got to have a stop right here because if it drops below that, I no longer want to be in that trade. Now, what's nice about this right here, and I'm actually going to show you an RSI right here. If you've watched any of my videos before, I typically don't use any of those tools because they're not really extremely valuable. But under circumstances like this is something that is actually showing to be quite valuable and just adds more layering to support the notion as to why I'm interested in getting into a trade. And I'm looking at what's called bullish divergence. Geez, can't even spit it out. Bullish divergence on the RSI. Now I have my RSI set to a 7 period right here. Typically the default's to a 14 period, but I like having it at a 7 period because I get faster reactions on the RSI. It keeps it more real time per se when you're looking at the 1 hour and 4 hour time frames. The lower the time frame, the better that lower period, like a 7 period RSI, is going to help you with. Now you can see that with just a brief overview of the RSI is anything below 20 is technically oversold, and anything above 80 is technically overbought. Now, typically those will default to 70 and 30. I like to look for extremely overbought, extremely oversold levels, so I have my limits at 80 and 20. Now you can see on this pullback right here, we got into some very oversold levels right here on the RSI. In fact, the RSI was buried at about 10 and a half. It was extremely oversold on the 4 hour. But look, at the lowest point right there, if we look right there, that closes at 24.25 on PYX. It rallied and then it's pulling back right now, but you can see that RSI right now is not pulling back into oversold levels, but we're looking at the close and we're at 23.91. So I've got an oversold RSI at 24.25 and I've got a not oversold RSI at 23.91. That's technically what's called bullish divergence on the RSI, and being on a 4 hour time frame, that's a pretty high time frame. I'm feeling pretty confident with that. The higher the time frame, typically the more reliable the signal is. So I've got, let's wrap all this up. We've got an initial run, we've got a pullback into a 382, we've got a break above, close above up here, okay, above these levels right here, break above, close above, and then we've got another retracement with a higher high, higher close, and bullish divergence on the RSI. When we put all this together, I think if you're not in this trade right now, I think you're looking at a fantastic risk reward. And I'll show you where I'm heading with this as far as a price target. I think it's just a phenomenal opportunity, quite honestly. What I'm going to do is look to do a measured move on this. And the way I'm going to do that is clone this leg right here. Anybody who's seen any of my other videos know exactly where I'm going with this. And I'm going to match it up with my lowest low right here, which is going to be about right there. You shrink this down so we can see where that's headed. Right at about that even mark, $38 per share, even handle. What I'm also going to do is draw in a line all the way right over here. I want to know where that 38 mark came into play before. Does it come into some really nice structure? A little bit. Comes into a little bit right here. Doesn't match up perfectly, but it's coming into about mid-range right there. So, and a little bit right there. If I drop it to a 1 hour, what does it look like? Does it look any different over here? A little bit. We start running into the tops right there. Yeah, that's a little bit better detail. right there, tops right there, top right there. So we do run into some high water marks right over there, for lack of a better term. Going back to a 4-hour, going back over to this. So I'm looking at this run. I think it's got potential based on a 382 retracement, typically signaling trend continuation up to about the 38 level mark. Now, what I can also do is draw what's called a Fibonacci extension. Same measurement from the lowest low right here to the highest high right here. Back on in. And wow, look at that. Look where that 1618 retracement perfectly comes in. It comes in, it's kind of hard to see because it's a little bit buried with my blue line right there, but let me get rid of that so you can see it. Look how that comes in. So the Fibonacci rule, that's a complete mathematical computation. That's how it comes up with that number, all based off of math. Okay, but I've got a completely separate measured move that has nothing to do with math. It just has everything to do with that previous run. And look, you get perfect confluence right at that 38 level mark. So now we start thinking about a risk reward. Okay, let's just say by grace of goodness that anybody who's looking to get in tomorrow really likes what they're seeing right here now that I laid it out, and they want to get in right at market open, provided it doesn't gap up or anything like that. You're looking at an open of, let's just say, 23.91. Okay, well, I know that my stop is going to have to go below these lows right here. So I know my stop is going to be, give it some wiggle room. Let's just say right there, pretty generous, a little bit, about almost 4.5% is going to be your risk to the downside. Now I'm looking at my risk to the upside, or what I'm looking at as far as profit target's concerned. I'm going to front load it just a little bit to make sure my order gets filled. Let's say 37.84. I mean, you're looking at nearly a 50, you're looking at 58% to the upside with a 4.35% risk to the downside, looking at about a 13.5 to 1 risk reward ratio. That's pretty darn good. And when you, like I said, it's already signaled to the upside right here. This thing right here is very significant to me in terms of technical analysis. It's already broken above the most recent resistance, and now we're just in a pullback. And I already mentioned too about the bullish divergence on the RSI. You've got a lot of things that are pointing this in a very positive direction. If it completes that move up there at about 38 bucks, which would be, to my knowledge, an all-time high. No, maybe not. It's at that range before, about 52, higher than that. So this could get interesting. Anyways, I see this as a great opportunity. Again, if I put it this way, if I were not already in it, I'm down a little over 4% on it right now. If I were not already in it right now, I'm in a full position. I'm not going to add to it. But if I were not in it right now, I would be making a very heavy move on my own behalf, looking at this risk reward and what it's already shown us on the chart right there. So anyways, just some thoughts with PYX. Gonna keep this video short this time. And anyways, I hope you like what you saw. If you did, let me know. If you did not, please let me know. Feel free to hit the like button. Feel free to share it. And follow me on Stock Twits as well as Twitter as well. All right. Thanks, and I will talk to you soon.